Good morning, everyone. It's 9th February 2017, and welcome to this edition of ProAMT Traders Digest. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All indicators, strategies shown in the video are for education purpose only. All levels discussed in this video are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any trade decision based on this video. We will not be responsible for any resulting profits or losses. So let's see what Nifty did today. An open within range, just below the value, pushes up into the point of control of previous day. B period makes a higher high. C period again just almost matching with the B period. The D period gives auction failure, and finally it starts pushing down. If you can see this, the way it was compressing, first it slowly leaves this compressed balance in the F period. G period makes, it gets more contracted but makes a lower low. Again H period breaks the IB low. I period expands a bit. This expansion gave a hint that this should break down. J period tries to push up, finally breaks down. Now breaks down and goes into the previous week's range. K period goes into the previous day's low, and finally L period pushing through this entire balance and pushes almost to this. It closes this virgin POC and a huge pullback. If you can see this volume here, stopping volume on this L period. Without a test, pushes higher and closes this virgin POC as well. So the auction is in complete balance. It has closed, so it has proven that it's accepting these prices, and depending upon the acceptance and rejection here, it will decide its future move. On the 1 minute, this if you can see, this went a bit sideways, a spike here, and this spike, if you can see this, this is the only spike we have on the volume in the first half till the RBI policy came out. Then a channel move down, tries to spike higher above the day mid, fails, creates a balance, breaks down from that balance. Now if you can see here, we have a small balance happening, stopping volume, and then a spike. That spike gets bought into. The average of the breakout is 8737 as of now, and we'll be looking for a reversal somewhere into this zone. So this is the after this going up, it's going above the initiative selling bar of 1 minute and then coming back. So a nice area here to watch, and what I would prefer is either the mid of this balance around 8757 or this low, which is 8762.55. So 8755 to 8765 would be the range to watch. If today it gets accepted into this, then we might see a short-term reversal. Until then, the trend stays up. On the 15-minute, I've been talking this long enough that you get a buyer getting stuck, a huge buyer getting stuck here. Uh, the delta goes neutral, and once it breaks down, gradually starts its move lower. Some buying coming in here, pushes, but again the buyer is getting stuck, finally pushes down, gets a continuation in selling, and finally goes down here into the 150% extension of previous day range. Now again it was the same behavior. Day before also, when it extended the range lower, it was not staying below the 127.2% extension. It like pushes down, but still the activity is just above that. So in this trend up, at least one extension we should get on the downside that gets accepted, then we can think of a short term reversal. Before that, it will be just like estimating. What is happening is, as the market goes higher, we think that these are unfair prices, but the participants are accepting these prices and the value is showing us that. So till the participants reject that upper balance, there is no trend reversal even on the short term. So finally, a lot of volume activity here, but though the daily volume is on this, it shows above average because it's the new contract, but the average is generally 9.5 to 10, so it's still below the average. Let's have a look at the Renko chart. So here we are seeing that you get a opening swing, a break of the opening swing low, and then a pushback into the mid. Now this impulse is not pushing through this zipper, so the same thing applies. I keep on saying that if it's able to push through this zipper, then we would consider the impulse higher, but otherwise it's a pullback which might result in an impulse lower of this similar magnitude. So that finally happens, and finally it comes down in an impulse. This pullback shortens, again an impulse, now a symmetric move up. When it's going up in this way, we want to see what it does in the mid. Is not able to push into the mid, gets stuck into this zipper. If you can see, this is a nice zipper here, and I'll just draw it. So pushes into that, fails, impulse, this impulse failure. Once it goes into, we have to go at least into this. So it goes into this, checks back, and then you get an impulse, pullback. This is a 50% pullback almost of this impulse, and then you are expecting a similar impulse up. So like those who draw patterns, this becomes a B, C, D. So however you consider, but I would like to consider these patterns on ranges because it works very well on these ranges. Let me clear the drawing, and we added this, we don't need this. I added to show actually, but we don't require that. Okay, so let's see what we can expect for today's trade. So I'm expecting open somewhere into this range. So, and also it's a for the momentum to accelerate, I would expect a open somewhere into the 8825 zone, 22225 zone. If it opens there, pushes into the 8815, fails, continues its move up above the high. So it goes above the swing high, checks it back, makes its move into the 8857, 8859, creates a balance there. Maybe if this happens early in the morning, the better it is. Then we can see a rally into the 8900 kind of zone. I'll give you the exact number where it might try to go. So 8892 kind of zone. But for that, it needs to push through the 8868. Otherwise, it will get stalled at 8845. So that is one possibility, that it gets stalled somewhere into this itself and push back, come down here. Now, suppose if we don't get a gap up open, then we'll look for this scenario, that if it opens in this range, then push down into the volume POC, try to push back up, continue its move down into the 8765 kind of zone, check interest there. So this is the point, check interest there and revert back to mean, or push down, check back and push into the 8730. So break the previous day low and then start seeking value lower into the 8730 zone. So that is if it opens inside. If it's opening outside and then failing back and coming, then also this will continue. And suppose if it opens in outside and directly fails, then also this continues. So these are the scenarios for today on Nifty. Let's have a look at the Bank Nifty. So a very compressed move after the open. Open is in the range, tries to push back, push above the point of control, fails. A very compressed move, and yesterday we were talking that when the move compresses, it tends to break down or break out. Now this I'd anticipate a breakdown, just because if it's creating value lower, so the context was that it's weakening. If it's weakening, it wants to go and test this first. So I would not expect this test directly, but I would expect the test of the previous week high initially, then push through that, this HVN, push through that, and then this comes into picture. So finally all that was covered, and similarly like Nifty, a huge pullback. This point of control still stays open on the higher side, and this entire zone is because we are into a new territory. So this is kind of the resistance, 2470 to 2485 kind of zone. So that is the resistance. Now let's have a look at the 1 minute chart. A channeled move down. So gradually it was like it was accepting lower prices into this, if you can see this, and then finally breaks down volatility, and this spike closes this virgin POC, and finally makes it, after balancing, makes its way down into this. So meantime, it has like closed all these balances that were open, and this is the balance that the second lower balance that we have. This is it, and then we have, these are minor balances. We'll take the major one as a center. So tries to accept lower, fails, and so there is, if it would have started trading into this, then we would consider a trend change, but instead of that, it pushed back higher. Now almost similar stuff on this 15-minute. Buyers coming in but not able to push prices higher, finally breaks down, and you get a huge seller stuck at the right at the bottom. Stopping volume, tries to come back down. Now it's not able to push through, and it pulls like so you have a WRB, the move generally gets over, and similarly you get a contraction, again a WRB and a WRB. So a very textbook sort of move. Now, not necessary that every 15 minutes such moves come, but that volatility created that move, and it's very methodical and not so awkward. Though when it's happening on the smaller time frame, on the 1 minute, we can see a lot of move, but on the 15 minutes, it's very methodical and not very awkward. So on the Renko, a zipper, a very messy move, pushes down. Now this down move has failed. It pushes into this previous day's close, and then impulse down, pull back, impulse down, again impulse up. So now when this is happening, but you have this zipper, so what you have to do is consider this entire box as a platform or a launch pad to create a move, because when it's contracting this much, it will create a move. So this was the launch pad of the move. We can mark this entire balance till we have that. So it pushes into this, fails, again tries to push, fails, huge impulse down. Now after this impulse, even a pullback into this would just mean a pullback, and we would be looking for another impulse down. Now that happens from here, impulse, pullback, impulse, a minor pullback, impulse. Getting tired here. Now again a symmetrical move. Now when this is happening, we wanted to go through this first and then decide. So it pushes through this, goes into the upper zipper and fails, comes back down. Now when this was happening, it's like if you can see, it's like within minutes, 14:35 till 14:56, you have a move of around 150 points, pullback of around 100 points, and then again a push of 250 points. So obviously there's no way that you will get the fills, or you'll be this entire move we won't be able to trade. We might be able to like scalp in 2-3 trades here and there, and but that too would be very risky. So in hindsight, narrating all this is fine, but obviously we cannot trade this move. What I did is like traded just this bit, and then when it tested here twice, I didn't get the fill, and finally this breakout gave me the fill. So let's see the expectation for today. I'll zoom out this chart. So any open above this range into the 2500, then goes higher, either fails and comes back down into this, or pushes into this and carries its move up into, let me see the reference, into the so here 565 is the first reference to watch, and above 565 might carry its move higher into the 650 zone. So if it goes into the 565, rejects, comes back, starts accepting, then we expect it to push down into this and again test this entire zone. So that is one scenario. If it starts accepting into this, then what I'm expecting is push down into this, pull back, push down, pull back, and gradually move into the lows of the previous day and start moving down further. If it gets buying into this area, then it might reject back and settle into the mean. So that is the most likely scenario that might play out. Now these are again, as I always say, that I'm just like visualizing how would the auction behave in normal circumstances. But again, if it was always textbook type, then the market won't exist. So we have to keep on adjusting during the day, but still the larger context would stay the same. So that's it for today. Have a profitable trading day, and thanks for watching.